employee medical insurance premium payable. Of $8,000, plus 12% of the gross is $12,000. Add those together, it comes to $20,000, and that's the total. And what the point of the matter is, sometimes these are estimatable, sometimes they're known. And so, an example of one that has to be estimated is the fact that at Clark College, 10% of, I put in 10% of my wages in TIAA CREF, and the college will match it. How much do they owe? Depends how much I make. Okay, and my wages can vary quite a bit. I can work overtime, okay, and in this case, what they're saying is they don't know how much it's going to be. In this case, it's $8,000 base, and then 10% of the, so it's $8,000 plus 10% of the gross. And of course, how much they pay depends on how much their employees make. And the same is true here at Clark. How much their match is depends on how much I pay. Ted, there's a mystery number.
Nope, just trying to read.
Okay, a mystery word. All right. They've been doing, yeah.
Is that 120,000? Is that their gross?
That's the gross.
Okay.
So they agree that what they do is it's $8,000 plus 10% of the gross. And it's estimated, they know they owe it, and they can reasonably estimate it, but they, they don't know how much it'll be until they know what the gross is. Okay. Another one is vacation pay. So what happens here is the employee earns $20,800 a year. Okay? And they get 2 weeks vacation a year.
Right?
Paid. Now, so the way this works is, they actually, so in this case, what happens on this thing is, here's the way it works is, 20,800 divided by 50, okay, equals 416. And the reason it does this one is, in effect, here's the annual pay. The employer only works 50 days a week, or 50 weeks a year. So this is how much the employee gets paid per month, per week. Okay? Now, the money that goes out is, the paycheck will be 28,000 divided by 52. That means that every week, $16 goes to the vacation pay. Okay? And the way that works is, so the weekly payroll will have an entry like this: vacation, benefits, expense will be $16, and vacation pay, vacation benefits payable will be $16. So what happens here, is everybody okay with that? So what happens in this thing is, this individual makes $28,800 annually and gets 2 weeks paid vacation, right? Now, that 2 weeks paid vacation is an expense. How much of an expense? Well, $20,800 is annual salary. Because he gets 2 weeks vacation a year, this person only works 50 weeks, right? So that means that if you get this amount annually, you work 50 weeks, that means that this is the amount that the person is paid annually, right, or every month, or every week. Then, that's how much that's how much wages expense are incurred every week. Then, when you take the 20,800 divided by 52, here's how much they're paid every week. The difference is how much vacation pay, how much is the vacation pay expense. So when you do the journal entry at the time of the payroll, it looks like this. So the weekly payroll has this entry. Does that sound good?
Yeah.
Yeah.
So is this regarding the employer or the employee? Like,
This
is
is-
$16 coming from the employer?
No, this is an employer's vacation pay expense.
Okay,
So
so the
the-
employer is technically paying it, not the employee.
Exactly, the employer pays, so when the employer pays the weekly payroll, there'll be $16 as a vacation pay expense.
Okay.
And this just keeps adding up. Then when the employee goes on vacation, it will come out of this payable.
Okay.
So then you'll debit vacation benefits pay
Exactly.
and credit.
Exactly.
and
It
credit
would
cash.
just be, exactly. Yeah. This will be debited, cash will be credited. Yeah.
So you're expensing it before they take it,
Yep. And
basically.
sure, and the expense, and the deal is the expense occurs, don't forget, an expense occurs, you call it an expense when you incur it. And so this is when they incur the expense, and then it's a payable, and when the employee goes on vacation, it comes out of this. Now, here's a bonus plan. So in this bonus plan, what the deal is everybody gets the bonus, people get a bonus, 5% of the gross. So for instance, they can have marvelous luck. Actually, we have, so they've had marvelous luck with these bonus plans. For instance, it was Tektronix. What they did is they paid their people a wage, but they would get a significant amount of money as a percent of the gross. And man, it really worked well. They went from a brand new company to the largest employer in Oregon in a pretty short time, and they attributed to this plan.
Which company is
It was Tektronix. Okay, so what happened here? So then what happened is, and it would work because you'd get off of work, you'd walk through the parking lot, you'd see a nail, and under these circumstances, you'd stoop down, pick up the nail, and put it in your pocket because you didn't want the delivery truck to get a flat tire because it came out of your bonus, right? And that worked charmingly for years, and then all of a sudden it quit working. And the reason I think they quit working is because they grew and grew and grew in size. And so when they were small, everybody saw themselves as significant. And it made a difference that I saw that nail. But when they got to be large, people felt insignificant and they quit doing it. They quit motivating. Okay? Now, in this particular one, it's 5% of gross. Now, how much is the gross? So here's the way it works is, okay? So in this case, what it is it's 5% gross, and the annual net income and by the way, it's 5% of the annual net income, not the gross, but net income, is 210. So the way this works is, the bonus equals 5% of the annual income minus the bonus. Okay? So the bonus equals 5% of the annual income minus the bonus. Does that make sense? And when you solve for B, so then let's kind of go through this. So B equals 10,500, 0.5 times that, minus 0.05B, then 1.05B equals 10,500, B equals 10,500 divided by 1.05, So the bonus equals $10,000. So here's the net income. And the reason you gotta work it this way is because it's the net income minus the bonus times 5%. Yeah,
How'd you get the 1.05?
right here. This B plus 0.05B. Because what you wanna do is you wanna move this over here.
Gotcha.
So to do that, you add 0.05B to each side, it comes out to be 1.05B. All right.